What up, everyone? What up, everyone? Welcome back to Financial Education and Business. Today, I'm going to be reviewing the stock Grab. While I enjoy this delicious snack, it is so good. Um, so we're gonna get into Grab. Let me see. Mm, so practically, oh, there's no link to it. Whoops. So practically, a lot of people are saying Grab is going to do really well. It's undervalued. This is a company that can be well above 15 or at $15. I'm sure we'll see some kind of resistance here at $10, but we're already starting to see this company since this period right here, July of 2022, has been seeing decent consolidated growth. And then in 2025, we've seen it just kind of consolidate within this $4 to $5, but we're finally breaking through into that $6 price, which that hasn't been the case since 2022. And a lot of people are saying the price can continue to climb higher. So you might ask, well, what is Grab, or what do they do? um, I just I pulled up just a couple things we can look at here. um, so Grab is practically like, think of Uber on steroids. It does a lot of different stuff that Uber is not able to do. They're not in the United States. They're mostly focused in that Asian region. They have a whole bunch of different products right within an app. People are able to drive their cars to deliver food, use Grab to be able to invest. So they have a whole bunch of different products within Grab that people are able to use. Um, so here they are. So we got Grab delivery is one thing, mobility, financial services, and others. So in the delivery section, they got food, um, have all your cravings delivered to you indoor, just like Uber does. Mart, find everything you need. Grocery shopping, Uber also has that. Then Express, send paycheck, documents, and beyond. The cool part about a company like this is that as different parts of the revenue, right, will do well, as maybe one part of the revenue might go down. So if you can kind of, even if if one of them is not doing well over the long term, or over one period, like a quarter or a month, you may see some kind of growth in another period to help them continue to do well in their specific products that they have, service they have here. So consumers, so they got mobility, so rides, choose from a variety of vehicles to take you from point A to point B. So you can be a food delivery person, you can be a mobility person. Financial services, they have pay, secure and seamless cashless payment online and in store, which is awesome. Insurance, so just imagine this, like, a lot of shoppers are now gonna start, a lot of people around the world have cell phones and are willing to pay using cell phones. And if they can just do their food mobility deliveries, and then as well as payment for that food on Grab, I think there is definitely a great opportunity here for Grab to take even more consumers. They also have insurance, so get everyday protection with accessible insurance. So imagine that you're a driver and you need insurance for your car or whatever it might be. Imagine that you're able to pay it through Grab, and Grab, let's say, is able to give you some kind of discount because you are on their service. Um, and so there's a lot of opportunity for them here, especially payment or insurance, and um, other. So in the other, you have Grab experience. Find your next adventure in Singapore with Grab culture, uh, culinary tours, which is cool. Hotels, discover and book amazing hotels and stays. Gift cards, send fun yet practical gift card to somebody today. And rewards, earn points and unlock benefits with every transaction. So that is such a good way. Like, Grab is literally grabbing the market and bringing as many customers as they can to the market, which is really cool. Really cool to see. Um, I think they're them being a very technology driven company has allowed them to be able to expand in the Asian market, to be people can get the different products that they want. So these are the Grab uh, consumers. So you got the drivers, earn with Grab, drive with us, deliver with us. Merchants, sell with us, become a Grab merchant partner, and increase your reach. So payment with us, deliver with us. So the cool part of payment with us is simplify transactions with the secure Grab Pay cashless payment. Deliver with us, big or small items, fulfill your customers' order seamlessly. So imagine if you had a business that you're running and you don't have the ability, let's say you don't have the ability to deliver all the products to your customers. Let's say customers want to buy your products, but like there isn't something like Uber or whatever. So you can just partner up with Grab, and whenever you want to sell something, you can just go. Customers can just pick it up, or drivers can come pick up those products right through Grab, which is pretty impressive here. Um, so I think Grab going into the merchant business it's a smart way to be able to grow revenue significantly, as a lot of as a lot of different companies are looking for ways to go digital, especially smaller companies are looking for ways to go digital and find ways to make their payment processing a lot cheaper, so that the cheaper you're able to do your business, the better it is in the long term. So for you to continue to grow and pay everybody else and also take profits for continued growth. So this is definitely a smart move to be able to partner with merchants. But not only that, like imagine you're a merchant with Grab, and now because you're a merchant with Grab, imagine now you can pay Grab ad services, and then you can have your products be an item that is an ad when customers are shopping through whatever they're looking. And so it's a good way businesses can partner up with Grab, and Grab to be able to make money through ads. Grab for business, so you got express on-demand package deliveries, food manage order for all employees and business occasions, business rights, book and manage rights for employee, visitors, and guests, financial services, secure funding for your business goals, gift cards, ads. So ads connect your business with millions online and offline. So this is the cool part. So imagine, the ad part. I think is going to be really amazing for Grab, just because when people just open their app, are scrolling through, companies can pay ad for their products to be placed at the top of the ad, at the top of the product, the service, the Grab app. So when customers and consumers are searching through whatever product, they're able to see, oh wait, I should buy some. What is this? And this is going to be a really good way for Grab to continue to grow. So Grab Defense, fraud management, protects your business from fraud. So as you can see, this company has like tentacles just going out and trying to make to serve their not only their drivers but also the other end, their the customers that actually produce the products. It's a good this is a good combination, a good way to do business, especially in the regions that are sometimes small. Maybe they don't have, some kind of security or defense, and so fraud protection. And Grab is able to do this for them. Um, and it's a trusted, it's a good way, it's a good way for Grab to serve and actually have strong long-term customers. So as you can see, here's Grab Defense, trusted by a variety of digital platforms. So as you can see, there's already multiple different companies that actually trust Grab, because imagine a company that you can onboard with and you can have all your business, and they'll say, listen, you can have your products listed on our app. We'll send people that can pick up your products and deliver to different customers, but not only that, we will help you defend your business through the services that we provide, or we can help you with advertisement. As you can see, Grab has Grab ads as well. So all these different products are, it's going to be able to bring more and more customers to Grab. And I think over the long term, between def- being able to defend their customers from like just any kind of fraud or threat, allowing customers to those companies to have some kind of ads so they come at the top of any of the products that they service. You can buy gift cards, financial. So there's a lot of benefits that Grab has that companies right now like Uber, any other company even in Asia doesn't even have. And recently, like, the only competition that Grab had, one of the main ones, is GOTO, and actually GOTO got in trouble. I mean, they are definitely one of the main competition for the region that they want to expand in. But if you're not operating a company in an honest manner, eventually people are gonna find out. So they what happened with GoTo is that they had the government, I think, gave GoTo or some money or laptops for to give to, like, kids that were in need, that needed a laptop for school. And GoTo, one of Grab's main competition in this region, ended up keeping all that laptop, and they recently got found out. And the crazy part was Grab was gonna buy that company. um, Let me see if I can actually go to fraud. So Grab was actually gonna buy this company, and they ended up not doing it. And actually, what this does is, if Grab does want to buy GoTo, this actually reduces the value of that company. And um, let's see, GoTo is fighting Scram with the new AI. Mm, I don't know where the news is. I may probably be able to find it on X, to be honest. But yeah, there was just a huge. Hey Ash, yes, I'm talking about Grab here. What do you think about Grab? I already have some shares, but I really am probably gonna buy more. So let's go like this and say, go to stock. Maybe it's like this. Um, so Grab. Peter, we got room. So go to margin. But this was late. So Amit, I think most people know who Amit is. He's big on this company Grab, but Peter. So here you go. Like, this is the CEO, I believe, speaking about CFO speaking on Grab, and just the strategic way they want to grow. They're talking about, oh, you guys want to acquire GoTo and merge, and then just take over the Asian market. But he, in this video, was saying, you know what, like, we don't want to grow. Um, we don't want to grow in a way where we want to like start buying companies. And sometimes, when it comes to mergers, it's kind of hard to merge everybody's idea, the way they run their business, and have everybody just be happy with the mergers. They're different different levels of leadership in between the two different types of companies. So it's hard to merge two different companies. And I think it was a good idea that GoTo, that Grab is looking to grow from a perspective of, hey, we're gonna just naturally dominate the market without just making all these different acquisitions. I think that's going to give them a couple things. It's going to give them strong customer base that has been there with them a long time, and also it's gonna. I have some shares of Grab. Nice. He said you bought some shares in Grab after you saw the company in full action. Yeah. Oh, you were in India, in Thailand. Yeah, I hear they're really big over there. That's such. You see, I need to travel more because I've seen a couple videos where people went actually went to like India or somewhere in Asia and they see Grab all over the place. I mean, Grab actually used to be a company. Actually, Uber, you, I think tried developing their wanted to compete against Grab, and what happened is they couldn't. It's hard because there's a couple things like the culture, the people, how they operate. It's hard to understand how that works. So what Uber did is, you know what, I think they gave up a portion of their business and they said, hey, what we will do is we will we will just buy a ton of Grab shares. So if you actually go back and look how, like, what are the main companies that hold Grab, you're gonna notice that that Uber is actually one of the main holders of Grab. And so this, and then We Ride also all did a recent strategic partnership with them as well. So I think Grab seems to be like the Uber, but then they also provide additional services that Uber doesn't even provide for a lot of companies here in the United States. So I think there's major growth, and I think Uber wouldn't even be like the second. I think Uber is the second or third company that has the most shares in Grab. Well, I'll look at the filings later, but like if Uber saw that there wasn't an opportunity with Grab, they wouldn't be making that investments. Like they want to grow, they want to expand their business. So you said when I came back to the U.S. and I looked at the balance sheet and saw the stock, yeah, I said, oh my gosh, I need to make some buys. $3 per share. It should be literally. It should be way more. It should be. It should be at least around $7 right now. Like, there's no way. Like, a lot of people don't. This is the kind of value that most people don't even know about. Like, you have these amazing companies that are international, but they don't understand it or they don't pop up on the radar. Grab is still a small company, and it's only like I think the market cap is how many $1 billion? Like it's not even that big here. So I started buying at 4, and it's $6 right now. Goodbye. Mm-hmm. Exactly. The network scaling is really crazy, and actually the crazy part is the the network is so important because imagine this, like if a person uses Grab for one thing, gives them the opportunity to use Grab for 1,000 other things. It's not just one thing. Like they get you in the door. It's almost like how it's almost how exactly how Robinhood is building itself. Like they'll get you in the door to just be able to buy stocks, but then there's so many other services that they want to provide to you in the long term. So Grab is the same way. You join for one thing. Let's say you want to pay for Grab ad, and then you notice, oh wait, they also do defense. Like I want my business protected. Let me also do that. Um, Let me do ads. Uh, Let me see if I can sell some gift cards. Like there's just a lot of opportunities and a lot of ways that Grab can grow. Like if one area of the business slows down, another area of the business is gonna definitely include continue to grow. I have some shares. I really want to buy. Um, yeah, I really want to buy a lot more. The network at scale is crazy, and the population of the Asian they can. I know, and also the population over there, right? People are starting to get phones, and the cool part is there's a lot of people that have. There's a lot of people that have the like their that do deliveries. Like imagine a lot of these like smaller countries, like they don't have a fancy car, but they have a motorcycle, and that's a perfect way for anybody that dreams of like, hey, I want to be able to buy a car, build a business. And for a lot of people it's difficult, but imagine if you had a motorcycle or whatever you have to be able to make these deliveries. You can slowly actually make a living for yourself. And a lot of Asian world, sometimes I think that's the main way of transportation anyway. So it works out perfectly. I mean, Grab is doing the natural growth, and not just going out there buying a whole bunch of companies. Now, if they wanted to buy a company, I think GOTO acquisition could be really good. And I think right now Grab, from the perspective of the culture, because of what happened recently, um, and there were some like riots going on and everything else. Like Grab actually now is seen from a limelight. People actually see Grab as a good company that's trying to help the culture. And so definitely, like I think this company is doing the right thing. So let's see if
Peter, I'm gonna
we
have
can
to ask this
try
question again.
watching this video here. um
But we're seeing more reports again over the Peter, I'm going to have to ask this question again, but we're seeing more reports again over the last 2 months since we last spoke about possible merger between Grab and your rival in Indonesia. Some analyst reports also coming out assuming that a Grab GoTo merger is pretty much a done deal, but we know that's not a done deal unless we get actual confirmation for either you or the other party. So again, forgive me for sounding like a broken record, Peter, but are Grab and GoTo in talks? Are you guys dating?
I won't comment on those ongoing speculation or rumors, JP. But what I will say is Indonesia continues to be a very important country for us. If you look at the growth actually of our Indonesia market from Q4 to Q1, we have more users on our platform than before. We actually continue to increase our margin also in the Indonesia business, and it's continued to be a very profitable country for us. So we're going to continue to double down. We really think Indonesia is underpenetrated actually for us, and we're going to continue to make sure that we have new products for the Indonesians to be able to use, and we also have to make them affordable, which we have been continuing to do in Indonesia itself. Lending is another great opportunity for us in Indonesia. We're starting to scale also the loan book in Indonesia for the consumer side as well as on the small businesses side. So we're very excited about Indonesia. We're going to heads down and continue to execute there.
there you go. I mean, you can see exactly what the CFO is focusing on. We're not going out there buying companies. We're focused on coming out with new products. One, helping the current customers, both the drivers, the consumers, and the drivers. So both sides. So that's the amazing part, is they have both sides of the business, and that is rare to have. So you're able to make money both on the consumer and the customer. They both come to your platform, and everybody's able to be successful. So that's amazing. So he said, if you saw the business in action, your jaw would drop. You can't walk around it. I know a lot of time they have those motorcycles that they're driving around and making those deliveries. I think we should be buying. Yeah, yeah, no, you're not wrong. You're not wrong, Ash. I think Grab is a buy right now. Like, I mean, I have shares. I'm tempted to add more. I think this is definitely a $10 company here. Um, so let's keep going. We talked about holders. I think there was also Grab brokers still didn't bother to post Q1 earnings. Let's see who else. So I mean, sentiment wise on here on X, really Grab is starting to pick up. I think I noticed the same thing on when I bought Ondas. This stock was down significantly, so I was like, "This is it's like 80 cents a share," and Ondas is now at $6 a share or so. I'm starting to see the same sentiment here. Grab is starting to get the attention of a lot of investors, and actually not just um, small investors, actually big time investors, and they're starting to see the value of this company. Um, I think as we continue to go, usually what happens is that you'll have big investors talking about it, and then the next thing you know, the price is just gonna is gonna go up. And right now, there's a lot of actually short interest on the company as well, and there's a lot of people going believing that the company is just ready to just do a significant breakout, because anybody that's been in Asia, I mean, just like Ash in this video that I'm recording is saying, the company's current experience, for a lot of people's experience when they go to Asia, they see the company just perform. They see customers use them. They see the Grab drivers all over the place, or business partnership all over the place. I want to just let's just look at the company's growth. I mean, this is going to be one of the reasons why you'll see this. Grab might be a decent buy, and a company that we should you should pay attention to. So you have a company here, annual growth. We're just going to look at their income statement here, and we're going to look at the first line here. So you have a company here in fiscal year of 2020 making about $446 million. And as you can see, the next year they made more. The year after, I mean, they grew about 43%, 44%, over 100% revenue growth, 60%. They did about 18% growth here, about between 2023 2024. Year to date, they're already at 18%, right? So this company looks like they're continuously growing their revenue, and the fact that they're coming out with new products and new services is pretty impressive. Let's see how much money they have after their expenses. So this is one of the reasons why a lot of companies might not be able to take them seriously, or actually even invest in them. When there's a company that's have a product, they're paying for the cost of the product, and they're ending up with going from a loss of year over year to actually gaining some money, a gross profit. And then when you start making gross profit, you can start building the income statement, finding ways to invest in new products. So this is actually a good indication of a company that is going from loss to an actual positive gross profit. But then how is the company doing, when it comes to after all their expenses? This is a company that used to lose $1.2 billion, right? And what are we seeing, over the course of a couple of years now? They're only losing $471 million. They're not stopping growth, and they're losing even less and less and less money. And this is where a lot of businesses actually start taking seriously what a company like Grab is doing. They're watching them. They're watching the growth, and as you continue to see this growth, that will build your momentum, trust that this company is actually doing the right thing, and they're actually expanding and growing exactly as they said, and in a very positive direction. So once you see this, once you see a company is losing less money, making more profit, and actually making growth, making more revenue and making good gross profit, companies are going to start taking it seriously. And this is the kind of company that will have a parabolic move to the top, because usually what happens is this is exactly what a lot of investors look for. These three metrics: revenue growing significantly, the gross profit getting into the positive, and then operating income going from negative loss to actually doing a better job at losing. So once they start actually making money here in the operating income, I think there's going to be a lot more expansion the company is able to do. I mean, these are just some of the small numbers, but the company has a ton of cash. So let me just go straight into net income, so we can look at what's going on at net income here. So we have net income, the company losing $2 billion, $3 billion, $1 billion. As you can see, net income is starting to get to the positive. So trailing 12 months, the company's already hit positive net income, which is a very positive thing to see. Once they report this and once they come out with guidance, I think it's gonna be just a significant amount of growth. And I think next week or this coming week, a lot of companies are gonna be have to make decisions on what they're gonna do with their rates when it comes to if they're going to increase the rates, keep rates. So if the rates go down, and I think a lot of countries are actually struggling and they need to do some monetary influence to the market, I think that a lot of companies, a lot of new jobs, a lot of people are going to be able to a lot of companies are going to be able to raise money or be able to have the ability to raise money using debt or whatever they want to do. So net income, we're getting into the positive. But the coolest part about Grab is they've been raising a ton of money. So let's say you see a company like Grab that is growing revenue, growing gross profit, losing less money at net income, and actually maybe trailing 12 months is actually positive. But on top of that, this is a company that raised like billions of dollars. This is a company that's not just growing from one perspective of, hey, we're just going to acquire companies in the region. They're naturally growing. But look at this. Look at their current assets, look at their current liabilities and long-term liabilities. So this is the company's current assets and current liabilities. So you have a current in 2020, they had a current asset of about 3.7 billion. Look at their liability, $800 million. And as you can see, their liability number is growing. But like look how quickly their current asset number, like, and how much of it they have, and look how much it's actually like kind of growing. $3.7 billion to 8 points, about 7, 5.6, 5.7. So this is a company that has billions of dollars to be able to invest in a lot of different businesses. Let's look at their long-term assets, or meaning long-term assets and long-term liabilities. So total liabilities. So this is a company total assets. So that has about $11.7 billion here back in 2020 in liabilities and long-term liabilities. But look how quickly this number is just dropped. This is the kind of company, like, this company used to have so much debt, they completely wiped their debt. They have enough, and then their total assets was low, and as you can see, this number, it just exploded up. Now they're sitting at about $11 billion in total assets and $4.7 billion in total liabilities. So this is 2 to 3x. Like, they have way more assets than they do the liabilities. So if anything ever happens that's negative, or they need to grow in a certain way, they're gonna just do this. They're just gonna go out there and they're just gonna say, we're able to pay that. We have the money, we have the assets, we have the current assets to pay off whatever kind of situation they run into. But not only that, we have the money to acquire companies if they want to expand. And any company that's gonna grow, I mean, makes sense. They're gonna be able to they're gonna they're gonna have to develop new technologies, and so Grab has the money to do stuff like that. From a dilution perspective, technically Grab doesn't have to dilute shareholders. They have enough. They have enough cash to be able to take care of their current um, be able to take care of their liabilities without diluting shareholders by issuing more shares. So as you can see, they have increased the number of shares that over the course of time, but overall the company doesn't have to sell all the stocks, issue more shares to raise more or to pay off debt. They have enough money to pay off any debt that they need to. So this is the kind of company that's making a lot of money, um, and the stock market is starting to see that appreciation. This is a company that's about to start hitting net income positive, gross profit positive numbers. And so before you know, the stock, as you can see, was about $5. Let's say a month ago, we're looking at the lowest $4.90. Now we're sitting at $6. The natural the natural position for this stock seems to be that $5 range, but recently we're starting to see that breakout. We're in this almost third and fourth quarter of the year. The company's going to be reporting their earnings, and I think we're going to see some strong earnings from this company, just because they're starting to be seen from a positive perspective in the Asian market. And I think the Asian culture naturally respects companies, and when they do, I think there's a lot more like homogeny, I guess that's the word. They want to really work with those kind of companies, and that builds a lot of trust and loyalty, and they're very big on loyalty over there. So as you can see, like I think as Grab continues to grow that relationship, I think this stock is gonna just continue to go up. We may, just break this $5 hell that they've been in. They've been in for quite a while. Obviously, like a lot of companies, April wasn't the best. I mean, it went down to what, $4. It looks like $3.07, but overall, it's that $5 average. Um, we just hit this 2022 price. I mean $6, but these are new heights for the stock. It has been there for a long time. I mean, if you bought it at $6, I mean you've had to have waited so long, like years, like 3 or 4 years to be able to buy it right now. So I think investors are happy when you zoom out and you look, okay, where has this stock been in the past? And I think, can we get there? I think it can definitely get there. This is this is a company that was priced at $11 when they didn't even have the same products they have right now. Like they had none of the same products. And so I think as they're shipping more products, and they're down what, 50% from, not, what is this, I guess from 5 years ago, but from all-time high of about, what is that price, $16.75. They're down a lot more than 50%. um, but I think over as they continue to just, you know as they continue to innovate, this is a company that has just a great future, and I think it's a great buy. um, Analyst report. So as you can see, analysts are all over the place here. So they are saying a price target: low, average, and high, medium, and high. So the highest price target from analysts. So the average, they're saying, it could be in the next 12-month forecast. They're saying, hey, this could be an $8 stock, or an average about maybe $5.94, and it's as low as $4.90. This is almost a safe company. I mean, saying is $4.90. Like the company kind of rotates within this price. Like it's even during COVID, it hit what, $3.75. That's the lowest it went at the worst, and that's like when the world. I mean, the entire tariff event was happening in April. Um, and so I think as we're definitely out of that tariff situation, and businesses are going to be, exploding. And I think yes, we can get into this $4, but like this is a company that is gonna hit the $4 is gonna go right back up, as the company is starting to have really good just financial statement overall. Let's see what we can look into. So here's an interesting news that I just quickly saw. So WeRide secures a strategic equity investment for Grab partners to deploy robotaxis and automation shuttle in South Asia. So a lot of people are saying, oh, Grab is not going to be a business for too long, because you're going to have all these companies that are autonomous driving is going to completely change the market. I don't know. I think especially we're having a hard time in the United States to get autonomous driving to actually work with all the regulation. And how do you really, what is the best way to have all these autonomous driving actually work? Because right now you have Tesla that doesn't even use LiDAR, uh, but Google uses LiDAR and uses camera, and it seems to it seems to be expanding very quickly, but still like not that much overall. So it would be years and years before a company like Uber or Lyft or Grab actually get impacted by a lot of this autonomous driving. I think it's going to take a long time to do that. But as you can see, they're showing, hey, we are innovative, we are looking for opportunities, we are looking for ways that maybe we can incorporate AI and autonomous driving autonomous driving capabilities here. So which is a pretty cool way to work with WeRide and show that they are like a somewhat innovative company, and because to be honest, it's really hard to get this level 4 robo taxi uh, to perform really well, because there's a lot of risk and there's a lot of what's the word, like philosophical questions, like, are we okay with robots or cars, or autonomous driving cars to hit and kill people or run over different stuff. So it's still very, very questionable. um, it's still a very questionable, however, questionable way that it's questionable that a lot of these AI or autonomous driving are actually going to take the market from them. So financial operations. So this, I mean, I guess I'll go. This is a July 2025, just financial information. So as you can see, just quarter over quarter revenue, Q2 of 2025. I mean, this is a company. They're growing their revenue 23%. Um, On-demand gross merchandise value is growing at about 21%, but they kept it consistent currency, and it shows about 18. But as you can see, year over year, they're having about 21% growth. Adjusted EBITDA of $101 million. Something I kind of wanted to point out is that from looking at the financials, as you can see, this is a company that's making what, about a little bit over $2 billion. Trailing 12 month, they're at $3 billion, and so this is a company making $3 billion a year, and they have cash on hand of about $6 billion. They make $3 billion. They have a year about, and they have over $6 billion in cash. Like, that is a fortress. Like, that is a strong company from financial analysis perspective. But so let's go on trailing 12 month adjusted free cash flow. I mean, yeah, the free cash flow is pretty good. And the crazy part is, like, a lot of these kind of companies, they have to build some kind of moat. And so the moat for Grab is just, I think that they're starting to get to be one of the strongest, like, technology companies that provides kind of service. And their moat is that nobody's gonna be able to have the customers and the consumers, and they gotta make it hard for the consumers and the customers. Not hard, but like make it a sticky product. And I think they are sticky because they continue to grow the number of people that use it, and the number of cash, or the number of revenue that they're making, as you can see year over year. As you can see, I mean, we can see it here. They're able to keep their customers and make their products very sticky, and find ways for the customers to use Grab as a very resourceful tool to live their daily life, whether you're the business selling the product or the customer making the deliveries. And 1,000 ways, many ways for the consumers to be able to use that product. So financial and operation highlights: mobility flywheel drives various cycles of growth. So mobility, monthly MTUs, I forgot what that was. So expanding mobility MTU base, growing transaction value, enhancing driver supply and lower average user fare, expanding mobility MTU. And that's a pretty good cycle there. And they're saying this is growing at about 19% year over year. Active driver partner supply, 18%. Number of mobility transactions, 23%. Average user trip fare down by about 4%. Financial and operational highlights, product-led initiatives and driving accessibility growth. So what are we seeing here is deliveries GMV adoption of new product initiative in deliveries continues to gain traction, driving GMV growth with output outpaced the outpaced that of our existing products by 3x since Q3 of 2023. So I think that is pretty cool. So as new products, as they release new product initiatives, they can contribute a third of deliveries GMV in Q2 2025, 15% increase. So this does make sense. As they come out with new products, they're gonna continue to see this growth in, well, obviously in stickiness and the number of ways that people are using the products itself. So operational loan loan portfolio to be greater than $1 billion at the end of 2025. So loan portfolio grows 78% year over year, 25% quarter over quarter, attributed to ecosystem lending and high lending value GMX. So the cool part about loan dispersal growth, 44%, reaching 2.9 billion annualized. Though the really cool part about this is, like, it's a good way for a lot of actually people that don't even have a car at all to be able to get into this business. Think about this. So if you don't have any money at all and you live, in one of the Asian countries, and maybe you just moved into the city and you need a way to buy a vehicle, or maybe you have some money and you want to buy a car so you can start delivering. Let's say you take a loan from with Grab, you deliver on Grab, and then you just pay back to the company. And so they can build a really good ecosystem of individuals that actually live off the app, and actually be able to buy food off the app and continue to get some credits, and really be able to be a very successful person just off of the Grab app. And I think that's pretty that's pretty impressive. Food ads, and here's the cool part. I think Grab and has on the merchant side, the way they're able to, I think, grow, because ads is such a good business. Like, you don't have to do a lot. You create it and then you put it there, and it doesn't take too much operational cost, and then people are able to get on there, look at your products and be able to buy it. But so Grab's financial and operational highlights, as you can see, advertising drives earnings and ecosystem uplift. So they have ads, so about $236 million annualized advertising revenue run rate, 1.7 advertising penetration, and then 31% year-over-year increase in quarterly self-service advertisers, and 9x greater than 9x average return on advertising spend. Pretty cool. It look just like this. So somebody gets on here, they're looking for whatever product, 40% off, flash deal, and somebody's able to buy that product. That product gets delivered to their house, and they're more likely to come back and make that purchase because they got a nice meal at a very good discounted price. Pretty awesome. Financial and operational highlights, maintaining discipline on capital allocation. So drive long-term sustainable value creation for shareholders, discipline investing for organic and profitable growth. And this is, I think, that the part I really like, that Grab is organically growing, and they're not just out here making purchases of companies and all and other competition they see around them. A good example is GOTO. Everybody was screaming like, "Go buy GOTO." They're an amazing company. Oh, I think they're your competition. If you buy GOTO, you're gonna dominate the industry. But they're patient, and I really like that they're patient. They're very smart because they're thinking about the long-term growth, and I think this is the kind of company that does well. And you can see that from the revenue, from the financial statements. Highly selective on inorganic opportunities. I agree. Very good highlight there. Maintain a strong balance sheet with ample liquidity. Very true. They have kept a really good, strong balance sheet so far. They are not They're being disciplined, investing and growing organically, highly selective when it comes to acquisitions, maintaining a really strong balance sheet because they had opportunities to be able to buy a company. They had the money. They raised a ton of money to be able to buy Grab, but they decided no, we're not going to buy it. And before you know it, the company they could have paid like billions of dollars for all of a sudden became maybe hundreds of millions of dollars. So pretty impressive. So return excess capital to shareholders. I don't know about that yet. Like, I mean, if they dilute through shares, I mean that would be annoying. But I don't think they don't have to. I don't think they pay dividends yet. I think they're a small company still, but I think over the long term, this is a strong company, strong leadership. I think these are just amazing qualities for a company that's not just looking for growth. They're they're looking for a strategic growth over the long term. Ample net cash liquidity, about $5.7 billion. That's a lot of money there. Financial results, I mean, we kind of look at those. We looked at some of those. Financial services, unaudited financial service, mobility, delivery, group financials, net cash liquidity. So let's look at this actually. So group finance. So let's start delivery. So let's look at delivery business specifically here. Q2 2025 unaudited results, but deliveries. So pretty cool here. We're seeing $356 million in Q2 2024, but then as you can see, this number just grew 23% to about $439 million dollars in within 1 year. So pretty impressive. That's a 23% growth, and year over year, and 18% year over year, constant currency adjusted. Gross merchandise value, and again, 22% growth year over year. Segment adjusted, 50% growth. Mobility, this is transportation. So we're looking at revenue growing at about 19%. Here we got gross merchandise value growing about 19%. Segment adjusted, I guess 27%. Growth there. Financial services, so these are the loans and everything else. So revenue from that is going up 41%. So people are going in, taking loans, probably finding out, wait, this actually works, or maybe word of mouth advertising, and they're getting more customers. Loan portfolio looks like it's growing significantly here. So they're doing this loan strategic growth a lot, because as you can see, year over year is up 78%. And this company is so small. These are still like newer kind of services that they are like a long leadway to be able to grow significantly. What do we have here? Segment adjusted. Segment adjusted, it looks like there was a decline of about $2 million. Revenue looks like about 39%. Segment adjusted is 30%. Segment adjusted EBITDA. Okay. I know. Ash, you're back. Yeah, it is a super app. Q2 unaudited results. So, I mean, I think we already kind of looked adjusted EBITDA, IFRS. Yeah, I don't think we have to go through all this, but we kind of looked at the overall company. I wanted to just quickly, go over and just see what some people on X is saying, but it is a pretty impressive company here. This person here, he's saying, hey, you know what's interesting here is saying, I'm seeing about 100 to 200 big accounts pumping Grab on X. Haven't seen any $600 next. I don't see a $600 stock next week, so I think we may be safe here. But practically, the sentiment around the stock on the app is growing, and I think if it goes down from here, well, what are we're going to see like a $5 stock. But I think once the momentum builds, I think sometimes it's really hard to stop that momentum. And I think they it looks like they're talking about, I prefer to have a strong base of high. Yeah, so I mean, yeah, I think like Palantir, for example, I thought they were going to talk about that, but Palantir, there's a lot of people that were like, oh, Palantir is overpriced. Oh, like nobody barely talked about it at all. But like these were like the kind of companies that always had really good business, but the market didn't see that business, and so they didn't have the opportunity to be able to. A lot of people didn't have the opportunity to be able to buy the stock. So I think Grab is one of those companies that the market still isn't noticing and is still not seeing, but I think it's expanding very quickly. And even though yes, there is risk, they are a smaller market cap company, but I think they got a good potential. So I have shares. I really am thinking of adding more just because I think my confidence in the company is really growing even more and more and more. I'm seeing more and more interest in the company and the companies that hold. Um, what is it called? It's called, if we were to look at companies F13F, Grab, 13F filings. If we were to look at, okay, what are the, the Grab Holding Limited filing? This may not work. Do Grab Holding. If we were to try to go find Grab Holding Limited, who is actually holding Grab? Like, what are the largest companies? And we've noticed, like in the recent times, that there's been a lot of individuals loading up on Grab. So this is 13F. So a lot of big, large institutional investors have to always they have to report how much of a specific stock they hold. So I used to have an account. I don't even know if I have one. Whoops. Well, you can get in touch with me. You got my email now. So as you can see, so Grab Holding Limited, operating transportation fintech platform South Asia, and as you can see here, this is Grab Holding 13F metric and pricing data. As you can see, this is the price that's going up in blue, and then number of holdings. As you can see, this it's hard to point at it because so that 3,388 or 3,290, was that, well, that's the stock. The 347 is the number of holdings. But look what are we seeing from a perspective of institutional investors. Like the number is growing very, very fast. I mean, if we were to look at the 1 year, so you have year to date, I think it's year to date. So you have the price that is chilling here, price that is just chilling here, and look at the price, and look at the number of funds that are holding. So you have 467 funds that are holding the company or the stock, and the stock is $4.80. But look what's going on here. Grab is at about $4. You have 489, and then what do we see about $5 stock, 490, and the number is slowly growing. The number of shareholders in the stock is just growing. And you can see it in this period right here. Maybe a bar, candlestick, line. Let's see if we can get a bar chart. That's better. Yeah, I mean, we do see that here. So you got about 317 funds that are holding it. Right now you have 489. These funds are no joke. I mean, they got billions of dollars that are making these purchases. So as you can see, the 13F filings, you have about, in top 10, you have funds that are holding, it's gone up. A funds holding, it was what is this number? So you got 489 funds. Prior, it was 467. So that's up 4.71%. So more funds are holding this company. 13F filings, I mean, There's a lot of companies doing that, and you can see the number of shares they're holding. And I just want to go down and show you like what are the companies who have a lot of shares, right? Look at this. So this is 13F filings, right? And let's look at this. You got Uber. Like I told you, Uber is at number one, actually. I didn't even know they were number one, but Uber has over $2.6 billion value dollars. I think that is the dollar column. That's about, yeah, 2.6 billion, 2.7 billion dollars in Grab. Like, why would Uber, a company that is in itself actually growing, needs to invest in other company in within the United States in autonomous driving, or make, whatever they need to do to grow? Why do they sink $2.7 billion in Grab? It's because they know there's a big market. Think of the United States population. The U.S. population is about what, 300 million, 315 million people. Think of Asia. It's a lot. All of Asia is a lot bigger than that. And so I think Grab, I'm not gonna say it's gonna be big. It could be much bigger, actually. It could be, from a delivery perspective, it could be way bigger than what Uber is, because Uber is kind of you know it's a United States business. Like, I don't think it's really expanding to the Asian markets and all that. It can't. The culture is different. They don't understand how people work. In the United States, they're an American company. They're gonna understand how people work. So, anyways, you have Uber, that's about $2.7 billion. You got SB Investing, investment advisors, sitting at $2 billion. You got Toyota. Why would Toyota Corporation have about $1 billion? Is Toyota hedging their bet? Or they're saying, wait a second, we make cars. This company does delivery stuff. Let's hedge. I don't know. You got Toyota, Morgan Stanley. I mean, BlackRock. BlackRock is in every company. Um, they own everybody. You got D.E. Shaw. You got a lot of the just large institutional investors holding this stock. But I wish, um, add new, reduce. How can I find this information? Here, I'll send you the link if I can. So this is how you can find that information. So you can kind of click on it and look at, and you can look. And the cool part about 13F is you can look at any kind of company that's being invested. So let's look at Uber's information here, if it let us. So Uber Technologies, and this is actually the cool part. Uber Technologies in 2024 had 535, which is about percent of portfolio. About, it looks like, no, it looks like 52%. They have about 14% ownership in Grab. Pretty impressive. And then you have 13F filings, change 0%, but they're just continuing to hold. They're continuing to hold the number of shares that they have. If we go back, let me close this. Let me look at the like what. I don't know why, but I think my stream is kind of dying on me. Um, if I was to go back, let's see, Grab holding, yeah. So 13F holdings. So look at the types of companies that Uber is holding. This is pretty impressive. So you have Grab at about 57%. You have Aurora Innovation, Joby. That should give you some hints here. If you're thinking about, okay, where are we going? What is Uber thinking? If you know Joby, you're gonna know what I mean. You got Serve Robotics. Actually, Serve Robotics used to be a they used to be this company used to be an umbrella under Uber, and then they kind of went public a couple years ago. I used to own the stock. I think the company overall is what they want to do is pretty good idea. But yeah, they got served, and then they got Marqueta, I guess, and I think Marqueta is like a company in Mexico that does like financial servicing. Marqueta operates a cloud-based open application program interface plan delivery. Yeah, that delivers card issuance. Okay, interesting. So I don't know who that is, but we know who Joby is. I mean, Joby is that does the EV tolls, the vertical EV, the electronic vertical liftoff, whatever. So I mean, there's a reason why they're an eVTOL. So it looks like this is a new firm they were able to add, as you can see, in June of 2025. So Uber, yeah, you're able to see the kind of companies they're investing in, but as you can see, Grab is a significant, a significant number there. It's no joke. Um, I wanted to see their Q2. Let me see. I want to see Q2. I want to find individuals. Okay, to see audit, exclude over restricted. Like I wanted to see not hedge trigger global willing, the Shaw, UBS. Yeah, I was trying to find like individual people that bought it here. Reduced. Let's see who reduced. I mean, this is kind of cool to see as well. You have companies that are um, reduce some of the shares. And no doubt, I mean, a lot of companies did make a ton of money off of Grab. Like they made a ton of money, and I can see them. Like if you're buying the stock at $2, $3, now it's at $6. I would take my profit and run off as well. But overall, like you're seeing companies that are adding millions of shares. I mean, you look here, Wilmington Management Group, they added 7.8 million shares in Q2 of 2025. I don't know why this. Oh, they've owned it since Q2 of 2022, but yeah, in Q2 of 2025, they've continued to hold the number of shares. But not only that, add more shares into the company. Yeah, so I maybe call me crazy, but I think there's probably a lot of people, a lot of large institutions adding to their portfolio the number of Grab shares without really moving the market too much. And I think once the stock goes, we're gonna see it just explode a lot higher. If I mean, we're seeing like these. I wish it's not gray, but like you're able to see these. You're able to see the number of institutional holders that are holding the Grab stock. So this number is growing. I think overall the company has just great opportunity to grow. We're seeing not only the institutional side purchases, but we're seeing just a standard everybody within the Twitter world, financial FinTwit, is continue to see the company just expand significantly. They're wanting to buy some of these shares. I think like Ash is, here in my chat was saying like they have a sticky product, and you can't go to Asia and not see a Grab product. For those of us that don't, get a chance to travel. Um, so I mean, the cool chart. I think. I mean, we've talked about this. I mean, this person's expectation is what we're about what $3 to $4. He's saying what $13. I think obviously, just like any technical analysis, this is gonna be tough. This is gonna be tough, a tough break. But like, what is this? Like, if you were to think about, okay, what actually caused the company to fail like this, and what is the company doing now to make these changes? I'll have to find out. Like, why did the company just straight up just you know fell off from heaven? Um, but it looks like they're recovering over over the long term, the stock is going, to $13. Here's another FinTwit person. He's like, hey, I love investing in US based companies, but I'm looking to add more international exposure to my portfolio. And he says, Grab. A Singapore Grab is a Southeastern Asian super app. Yep. Just like you said, Ash, this super app covering ride hailing, food delivery, digital platform, as well as for both ends of the market. I think that's the part that most people don't understand is Grab services the consumer and the customer, the consumer and the customer, like both ends, the merchants and the delivery drivers. um, yeah, Grab did have, yeah, $6.28. I mean, starting to hit new heights. Um, one of the guys that I just Amit. I think Amit has done, invested quite a bit into Grab. I think he's saying $7 stock or $10 stock by 2027. I think I think he's being very conservative. He's being conservative. But I think the stock, once it catches momentum, I think we're gonna see it right back where it was in a year, maybe less, like probably a year. Um, and here's another chart of like institutional holders. This is a pretty good chart here showing Grab holding, institutional holder. Each bar shows you, like, you know the growth of the number of institutional holders. So in June 22, we're sitting about 1.4 billion shares held by institution. And by 2025, June 2025, we're sitting at about, what is that number, about 2.3 2.3 billion shares held. So pretty impressive ownership of Grab closing price. So pretty impressive. So closing price is really hard to see, but we're around here. This is the closing price. This is the number of institutional holders. Um, Definitely growing pretty fast. I mean, you don't. Where do you think this chart is going? In a year or 2 years or so? And honestly, there's one thing I didn't point out. There's one important thing I didn't point out here. So we had we had COVID, and there's a lot. Obviously, that we had. Oh man, this chart doesn't go. Go max. This chart. This is a terrible chart. But like this company, 2020. Yes, we had a bad year, but like there's been a ton of stocks that have recovered significantly and have been doing very well. Grab is one of the only companies that literally has not seen that significant pop, even though this is a company that is a growth company that a lot of investors are looking for right now. So if they're looking at, hey, where can I go in the market to buy a good growth opportunity, they're looking at Grab. I think. And so, what is it? And then on top of that, what is a good growth company that has that a lot of investors have forgotten about and has not really taken a second look at? And that's hitting good revenue growth, that is about to hit positive gross profit, and trailing 12 month is already hit positive net income, right, in trailing 12 months, but overall it hasn't yet. And also a company that has strong balance sheet. I think this is where they're gonna go. So Grab, I mean, I've already said what I think, but yeah, this is really cool to see. Institutional investors are coming in. Institutional investors are gonna just throw billions of dollars. The one thing you gotta know about institutional investors, they're like sheep. They are, they don't operate independently. What happens is they have investors that expect them to make return for all these hedge funds, and so one institutional company would buy into a company like Grab, and then another institutional firm will see, oh, this company buy, so we better buy it because we don't want to be left behind. And so because of that, they kind of really just follow each other, and they just literally like sheep. And so I think we're going to see more and more. All that to say, we're going to see more and more and more institutional investors that are going to enter the going to be purchasing Grab. Grab, it said Grab cleared a neckline last week. Big eye open. Cup and handle 2.5 years is almost there. Yeah. I mean, this is a turning point. I mean, look at this company. It's been on an uptrend for a while now. It's been on an uptrend. It's not going to just all of a sudden stop going on an uptrend. The company's been on an uptrend when they didn't even have good net income, good revenues, not as much profit, not as much product. Look at this company in 2021. They went IPO around here, and they were able to go IPO here. And the crazy part there is the company didn't even have half the products, half the number of customers, half the technology, half the services, and they were at 13. And they're down about what, 50, 60%? I don't know. If it walks, I think that there's something missing. There's a mismatch in the valuation of the company and the price of the stock. They always say the stock is not the company is in the stock. Um, and I think that is true when you think of a company like um, Palantir. Like, a lot of people say, you know what? Oh, actually, no. Google is a good example. Google has a great product that it has AI, quantum. I mean, Google is such a great company. They have everything in technology that you can ever have, from payments to phones to watches to social media. Like, they have it all. And but then the stock about 2 months ago was dead. Everybody thought, oh, Google isn't going to be able to compete against anybody. Google is going to lose to OpenAI. They're going to lose their access to Chrome, and they're too much of a monopoly. The reality is a lot of times people think, oh, the company is going to die off and not buy it, but then don't realize that no, like, Google is going to win the AI battle, and I think Grab is going to continue to win. And I think right now with Grab, the stock is in the company. The valuation of the company is not where the stock price should be. So there's that mismatch. That's the delta that I guess we try to always see. We try to always find value in. So here, this person says, "Hey, Grab is setting up for for a 90+% move." That would be pretty impressive. So this guy's saying, "Well, all right, all right." So this guy's thinking that we're gonna go all the way up to what, $10? I don't know. $10? It's not impossible. I mean, this stock should be. I mean, some Ash said it should be $20 stock. Yeah, it should be a lot more. I think it's a good. The crazy thing to say about this stock is it's actually a safe stock when it comes from an investment perspective. Um, Grab is actually a safe stock. Like, even if it goes to $4, it is coming right back up just because of the interest in the company. In a weird way, it's, this stock is either going to $10 or it's gonna stay at this price for quite some time. When I say quite some time, I mean it could be a year or whatever. But they're always, Grab is gonna continue to produce more products and services. But in a way, this is such a safe company. They're not like we just saw the CFO talking about how they want to grow. They're not gonna just buy random services. So let's look at this video. It says Grab long-term shareholders should expect a massive amount of new traders gonna come out and declare $50 to $100 next month. You Grab for the common stock. Let's watch this video. What's going on?
9 million. So every service we do, whether it's ride hailing, whether it's food delivery, whether it's grocery delivery, whether it's loans or lending services, whether it's deposit micro savings. Every one of this you can see, it empowers the bottom of the pyramid to anyone and everyone in between. So today we empower over 9 million everyday entrepreneurs, from drivers to merchants. Some we make up 100% of their daily earnings, some we make up 20-30% of their daily earnings, all across the region.
Most of us are consumers, but just think about the millions of merchants or micro entrepreneurs that rely on Grab every single day for every part of their life, including their livelihood.
That was our entire thesis, was we came from many governments in the region that would give out aid handouts. I remember when Ling and I first trained our first set of drivers. They've never seen a smartphone before. I talked to them, I said, look, you just pay $1 a day to us. We will let you have this smartphone and they could earn an income. And I remember it was the first time this concept of, we're not gonna give you an aid, we're gonna give you a fishing rod to help you fish and feed your family through their earnings as a driver. And they did it themselves, and that gave them self-pride and self-respect. It's something I don't think handouts can do. Drivers in this region are a subset of 60% of the world's population, which is bottom of the pyramid. These are the largest consumers of the world. They are the backbone of Southeast Asian economy. So aiming and serving this vulnerable group of doing good and uplifting them actually builds a sustainable, profitable business.
I think one of the things that Anthony realized in the process of giving birth to Grab was that in order for him to have the maximum impact that he could have across the entire region and to employ millions of drivers as he now employs, he really needed to think about a market-based solution that was sustainable, that didn't require people to write checks every year. He was really focused on a business that could be sustainable across the region and positioned to scale.
To be a Christ-centered leader, you are expected to do excellent work. That is in the word. This idea or this fallacy, I would say a myth, that by doing good, you actually deliver below returns. In fact, I would argue and I strongly believe in the total opposite. Today, our whole business model has been serving the underserved, whether it's women and children who needed safety. We've built a ride-hailing, very profitable business. But how did it start? Because we founded on serving the underserved. Because we had to figure a way how to make money by serving, and I'll tell you it's hard to serve the underserved, to serve the underbanked, and make money. You had to invent. You had to move the efficiency frontier or the productivity frontier. But how do you shift the frontier is by invention, by reinvention, by innovation. So it forces you to invent.
Just saying, but that gets me fired up. I mean, how it is such a tough business. How do you go to the poorest communities and try to get your business to operate and actually make money because they don't have anything? And I think what this gives a company like Grab is an opportunity to start doing micro loans. And micro loans are so significant. And if you look at the number of micro loans and who does well in that industry, I think you'll notice that women a lot of times love these micro loans and they actually pay it back and they take good opportunity that's given to them. And I think over the long term, I think Grab has that opportunity to actually be seen as a company that's there to help the country, improve the people, give give them opportunities to be able to rise up from the hardship that they have and be able to have a business, take care of their family and their community. So I think this is like Grab is that company that really has a strong potential to change like a lot of these Asian cultures in a positive countries in a positive manner. Um, so I mean that was pretty inspiring video to watch with the CEO. Um, cool. This person Grab is up 5%. This guy's excited here. He made about $6,000 gain total gain or loss. Um, Grab. I would like. I will link the full interview below. Anthony never talked about not expanding. He is openly global market, but so much more room to grow. In current 8 markets. We're not gonna watch it on the video. So there was, to be honest, I was looking for this metric around Grab, which I'm having a really hard time. Really having a hard time finding it right now, but it was. This is a cool chart here. So Grab is in the S curve growth phase. CapEx ramping up it to secure the market share from GOTO. I mean, to be honest, this is such a big thing right here. If GOTO loses, I think Grab. I mean, if GOTO disappears or Grab is able to pick up GOTO at a very cheap price, yeah, game over, game over. And I think this is an additional factor that investors are not realizing is once GoTo once GoTo kind of loses a lot of the customers and a lot of the lies that GoTo was cut about and the reputation's gone. One, people are gonna go to Grab. GoTo is gonna have, I think, it's lost a whole bunch of market cap already because of the lie. What that gives an opportunity for Grab is to pick up GoTo at a very cheap valuation. So, anyways, and the exiting some more incentives on Grab Unlimited to be expected discussed in Q2 of 2025. Cash flow and cash on balance sheet will be used to expand GrabFin aggressively to be performing H2 2026. You know, something I didn't talk about is Grab actually is getting into like brokerage. Like they wanna allow people to be able to buy stocks, buy, invest, and trade. Maybe not trade, but to be able to um, buy stocks. I don't know what how many like how much stock trading people actually do, but like I think it's pretty cool that they're into like all financial services, business services, and allow people to not only deliver, be able to buy stocks as they're doing these deliveries. And I'm sure a lot of some of these the poorest of poorest communities don't even know how to do this stuff. But like if you had a platform where you make money and you can also invest, I think it makes it easier because you can say, hey, every day I make money, take 5% or 2% and invest it in my in whatever stock you want to. I think there is potential there. We got Grab Mart will also so we got cash flow and cash on balance sheet will be used to expand Grab Fin aggressively in H2 2025 pre-guidance. Grab Mart will also be invested heavily. Grab Drone is being tested. I don't know about I don't know, maybe drones would work. I don't know. During this phase, Grab EPS, earnings per share, will be volatile. It will be green EPS, but minimal growth to favor revenue growth. Bears will be using PE to make bear case. Yeah. So your everyday everything app, order a bite, get daily essentials, and send packages and documents. Um, mm, All right. Yeah, I think that's it. So I am the 1 year later. The bricks are still here. I would be interested to see like some kind of video of people actually like riding in a grab, um and like actually in a grab vehicle, or doing some kind of delivery in a grab. um and something I like about Twitter is that they actually have groups, um grab retail investors. And sometimes this is actually where I get some of my, like, information of like, okay, what's going on in the market, what are the opportunities out there. I mean, this group here is Grab Trades, all-time high $6.60. I mean, look at this stock. I mean, yeah, I hit this, but like, I think next time they report their earnings, Grab is gonna see some it's gonna see some significant growth. I think people are is gonna put them in the charts. I think once Grab starts hitting that like $6-7, and then they report a positive gross profit, they're gonna be off the charts. Um, I mean, right now, what I mean, the market close is 5.99. I think we're sitting way above that already. So, but yeah, this is sometimes where I go to see, what's going on with the stock, what kind of investment opportunities are there. um People, as you can see, like, people are getting excited. September, these are all posts from September 12th. This does not used to exist. And like, literally, I was on this I was this it was the same thing for me when it comes to on us. Like, this is a company that I owned when it was around 80 cents or something, and right now they're sitting at $5.55. Did I expect them to do this well? No way. But I knew what they're providing was pretty impressive, because it was during when we were having all that event in Ukraine, where they were like sending drones into Russia and all that kind of stuff. So I was like, wait, this is gonna be the future, and the U.S. is gonna have to get ahead of the game before we get invaded by all these millions of drone shows that we see in China. So, anyways, so I think I'm seeing something similar here with Andas. Andas. Um, well, Anda is also a great investment. This company here is pretty cool. If you're into crypto, if you're into crypto and looking at a company that is working on bringing, yeah, I'll go to it. So this company here is pretty impressive, actually, and I think it's gonna have a great run. So right now they're talking about, like, Robinhood is talking about bringing on the stock market onto chain load, so into the blockchain market. So Ando, I think the Andu or Ando is actually already allows individuals to buy and sell stocks, but on the blockchain. And I think that's pretty impressive, because it seems like more and more companies are starting to want that. And I think, just like not long ago, the Nasdaq is actually bringing on the a lot of stocks into onto the chain using the Ethereum network. So yeah, real world assets. So, which is, I mean, anyways, this is obviously not about Grab, but like, there's just a lot of really the world's changing, and there's just like a lot of different opportunities out there. um so we did look at the stock. We saw the large institutions that are starting to buy the stock, and we noticed that one of the biggest holders, where am I, of Grab is Uber. um mm, where did it go? Oh, Q2. It's because it's only Q2. It doesn't show it. Uber. reduced. Oh, restricted. No change. Reduced. Add to. Close. New. Any. Am I crazy? Did I not see Uber? Oops. Uber on the list. Mm, I think I think Uber is one of the main holders of Grab here. For some reason the app is hating on me. Um, this app is pretty cool. If you haven't used it before, it tells you you can go on here and just see any company on that is reported their um, filings on dashboard and home. Um, and you can follow pretty closely. I mean, and one of the bigger companies, obviously, United Health. Um, there's been a lot of companies that have been buying United Health just because obviously they dumped like crazy due to that whole situation that happened with the CEO. We got Nvidia. I mean, a lot about Apple. There's a lot of sellers. Obviously, Apple did not have really good presentation. People didn't like the new products they came out with. But honestly, I didn't mind the Apple Watch. It looked. I liked a lot of the new features they had. The stories that they were able to talk about right at the start of the show. Not bad. We got CoreWeave buyers. I mean, CoreWeave took off. I think Oracle is honestly it's gonna be one of the biggest companies here. Um, if you don't know, there's this whole thing. I don't know if you know, but there's this thing in California that's being developed right now, and it's called Project Stargate. You may have heard of it, but it's one of the biggest AI facilities, almost I think probably in the entire world, and at least all of the United States. And there's a lot of money being invested into this project. So Oracle is actually going to play a big role in that service there. So as you can see, that's, I mean, obviously the stock just has, I've had really just it's been performing very well. This is what Oracle, a $255 stock. In the past month, it's gone from a what $232 to $330 stock. So but overall, there's Oracle, I think it's going to be one of the biggest companies when it comes to AI security, develop AI security, and being able to work with this Project Stargate. So Project Stargate. Let's go check it out. Stargate. Oh my goodness, I can't even write. So Project Stargate. So here it is. I don't know. Maybe this is a cookie site. Stargate AI explained what is the $500 billion project. Oracle. They don't talk about it. Project Stargate and Oracle. Look at this. So OpenAI Oracle eyes a 300 billion cloud deal. Is there? All right. Let's just have the AI. What are we doing? We're in 2025, and so Project Stargate is OpenAI's ambitious AI infrastructure initiative targeting the development of massive AI data center capable capacity in the United States, collaborating with Oracle forums and central components of the effort. So as you can see, I think Oracle is going to be playing quite a central role here. So partnership scope, so gigawatt scale size. So it's going to be a 4.5 gigawatt. It's going to need that much energy deployed. And there's actually there's a lot of companies. I mean, CoreWeave recently just had like a good moment. I think a company like Iran that has a lot of gigawatts, a lot of new properties they've been buying to be able to be a part of this game here. Um, to be able to sell some of that energy to this kind of infrastructure. It looks like there's a potential that this data center can also similar data center may be built here in Florida, but right now this Project Stargate, one of them is underway. There's been a lot of construction being built South Texas. They need a lot of energy. So when you think of a company to invest in, energy industry is going to be freaking insane. So investment and deal value. The partnership is part of the broader infrastructure program projected to involve up to $500 billion in AI infrastructure investment over 4 years. I mean, the crazy part is $500 billion in this AI infrastructure, and we know AI takes so much energy. So there's gonna be a lot of energy companies that are gonna benefit. I think there's gonna be a lot of benefit from these companies that make like small modular reactors as SMRs, and Google's using that small SMRs right now, and I think one of the small SMR companies, Oklo, I believe. Um, um, it's being invested by like a lot of like OpenAI CEO is also invested in that. I think also Bill Gates is trying to develop his own like renewable energy source. Or a nuclear SMR source. So there's a lot of new opportunities. So as you can see, they're saying we're going to create 100,000 jobs. The project's going to be $500 billion. And separately, media sources reported the $300 billion multi-year cloud deal, and obviously cloud deal. In all of this, I think there's going to be one thing that's going to be more important than anything else. If you're going to develop anything that's AI, you have to develop something that is going to be secure. And AI security is going to be one of the big AI security and energy are going to be one of the biggest things out there. Literally, AI security is above everything else. Because it doesn't matter how much energy you have, it doesn't matter what kind of facility you have. If you don't have security, no need to even do what you're doing. So AI security, I think AI security companies are going to be one of the biggest, one of the most important companies out there. From that perspective, if we were to look at like AI security, let's look at cyber. Actually, let's do this. Let's look at one company that does some cyber security. At Oracle does it. Let me look at. I think this shows me comparisons. Oracle. So Oracle is gonna have. Did they show their competition? Industry cybersecurity. Okay, let's see. So Microsoft, Oracle, Palantir, Palo Alto. Palo Alto is a pretty good cybersecurity company. Oracle is pretty good. PanW. Actually, what I'm going to do is I'm going to go here, say PanW. There's actually a pretty good list of companies that are in this industry specifically. So as you can see here, this is exactly what I was looking for. Cybersecurity, security trend, top quarterly growth rates. So here are some of the top cybersecurity: Zscaler, Oracle, Cisco, CrowdStrike. These are some of the largest like cybersecurity companies, and it is going to be so important. Cybersecurity is going to be one of the most important technologies that we have to have if we're gonna continue to grow our lead, keep our lead in the cybersecurity world. But anyways, and if we're gonna keep our growth in the AI, and in the AI development, and make the American AI the main AI that is out there and being used by the world. But anyways, that was a little bit of segue, but this video was meant to be mainly about Grab. I did grab. I think I think that is all I have though. We covered everything we have. What we can do is let's go to FinViz and look at Grab real quick, and we can do a quick review of what's going on. Look at this. Look how crazy this is. This stock has great potential here. I mean, what, $10 in a couple years, maybe in a year, to be honest. I think we can be there in a year. So just a high level news here from Grab. Grab Holding Limited is trending stock. Yesterday's facts to know about before betting on it. We got, what does Wall Street think about Grab Holding? Uber versus Grab, which ride hailing stocks better? Is it worth investing in Grab? Join the thousands traders who make more informed decisions with a premium feature. Grab Holding Q2. So Grab Holding Limited. So Zach. This is from Zach Financial. Zach Invest. They say Grab Holdings Limited is trending. Facts to know earnings estimates. 12-month earnings per share. We're continuing to see earnings per share go up. Pretty good. Projected revenue growth. In the case of Grab, the consensus sales estimate $867 million for the quarter requires a point to be year-over-year change of about 21%. The $3.38 billion to $4 billion estimate for the current and next fiscal year indicates change about 21 to 18% respectively. Last reported results and surprise history. Grab reported revenue of about $819 million in the last reported quarter, representing a year-over-year growth of about 23%, earning per share about 0.01 cents for the same period compared to with about -1 cents a year ago. Compared to Zach's consensus estimates, $809.44 million, the reported revenue represents a surplus of about 1.8%, EPS surprise of about 0%. Valuation, no investment decisions can be conclusion, the facts discussed. That's actually kind of terrible. So what does Wall Street think about Grab Holding? Get a grip. WeRide secures strategic equity investments in Grab partners, deploys robotaxi and autonomous shuttles. Yeah, I mean it's gonna take some time. I don't know if the whole autonomous driving is gonna be a thing for quite some time. But yeah, so overall, this is what I wanted to cover. You can see Grab has a decent business. Their stock is going up. The business, their product services are expanding. They want to do more. They have really good assets, and compared to liabilities. They are showing. Let me go back one more. They are showing that they're able to keep their liabilities down while keeping their assets up. So that is all. Thank you so much for joining me. I'll speak to you another day.